breaking stereotypes. Gotta keep it to the terms of crypto hype. The passive mainstream, they're on the rise. Educating the masses, opening our eyes. Underground crypto, shining bright, taking us on a journey.
Welcome to Underground Crypto, back with another deep dive for you guys. Hope you've been enjoying the new series that we're doing, What's Trending Daily Top Gainers. We've been putting those out, more to come. Hopefully going to get them out every day. We'll see, busy schedule. Now, today we're going to be going over Blast. Blast I've been seeing is trending, of course, if you caught my daily trending video of the day. But I've also heard rumbles of, on Twitter about it and stuff like that. So it seems to be catching a lot of popularity. It's got a $414.3 million market cap. So I'm assuming people like this coin because there is some money being pumped into it. Max supply looks like $100 billion. $100 billion tokens is what I mean. And then the circulating supply is only 17.2 billion. So that tells us there's a lot of supply somewhere. And where is that supply? I don't know. Hopefully we will find out. So if you look at the 24-hour chart, it was as high as, 0.028, so almost 3 cents. And right now we're sitting at 0.024. It is up 4.8, 4.7% on the day, but we are down in the 24 hours. If you go to the 7-day, it looks pretty much the same. All of these look exactly the same. Looks like the latest it has it back is to June 26th. That's interesting. I know this is a newer coin. And then it has the contract address Blast symbol here, meaning that there must be a Blast blockchain, which is cool, of course. And we will open up the website in a new window and take a look at that in a minute. Same with the Twitter. We will be looking at that shortly. And we are going to read the about. So it says Blast is the only Ethereum layer 2 L2 with the native yield for ETH and stablecoin. Blast yield comes from ETH staking in real world assets, RWA protocols, which is a very popular niche right now and I think will continue to be, automatically passing the yield back to the users while the other L2s have default interest rates of 0%. Blast offers 3.4 yield for ETH and 8% for stablecoins. Blast is unique in providing builders with new building blocks, native yield and gas revenue sharing. dApps can use these to build more competitive products and business models than any other chain. So right there gives you a short summary. We will be going to their website and going over that. And at the end of this review, I'm not a financial advisor. Nothing I say or do should be taken as financial advice. But after the review, if you want to speculate, aka invest in this coin, where can you get it? So exchanges, you got Bybit, Bithumb, Upbit, Gate.io, BitGet, HTX, XT.com, Thruster Volume 3, KuCoin, Bitmart. I wonder what Thruster is. That must be on the Blast blockchain. Yeah, it's a decentralized exchange. That's pretty cool. Maybe we'll do a review of that at some point. Yeah, and there's more pages of these, but these are your top ones. Only one on here that I would really use is KuCoin or Bitmart. And that's because although I live in the United States, I have a Palau digital residency ID. If that's something that you want so that you don't have to worry about exchanges and getting kicked off or losing money or something like that, you might want to look into a Palau ID. Alright, so let's check out their website. I have not looked at their website previous to recording that. It's kind of the point of the channel is we deep dive stuff together. I was already doing these deep dives on these different coins on a daily basis, so I figured why not build a community, why not make these videos and make it easier, because some people are busy and they just want to listen to it and get the deep research, get the deeper things behind these coins before they invest. But maybe you're really busy and you don't really have time to sit here and read their website and go over their Twitter. So hopefully I'm making that life a little bit easier there. So it says claim phase 1 airdrop. So they're doing some kind of airdrops for sure. And then it says the full stack chain, the only EVM chain with native yield for ETH and stablecoins. Bridge and earn. And that looks like the whole website. Let's see what else we got here. Let's see what the vision is. Oh wow, we got actual little video. I wonder how long this video is, to be honest with you. And we got to turn the volume way down because
Hey everyone,
You're always
it's Jen.
way too loud.
You know, not too long ago, the Blast Foundation and Arcade Research actually reached out to me to help Pac-Man share the story and vision behind Blast. And with all of the exciting announcements around the Blast ecosystem and Phase 2 now starting, I kind of figured the best place to start would be by interviewing Pac-Man himself, the CEO of Arcade Research and a core contributor to the Blast Foundation. So with that said, let's dig in.
Alright guys, I was hoping that video would be, a little bit shorter, a little more compact. Looks like that video is 41 minutes and 50 seconds. So I don't think you guys want me to play that. You can certainly go look at that on your own time. So it says Chinese. So is this a Chinese project? I don't know. Read this post to better understand the future of Blast, to understand the past. Check it out, Blast's first quarterly report. As you know, Blast started as a chain with a native yield. In 4 months, Blast has grown to the 6th largest on-chain economy and is one of the fastest growing chains of all time. We have a chart here, TVL 100 days, and it certainly has been moving. What are these other lines in relation to? I don't know. They didn't tell us on that chart. So the big question now is, what's next? Blast's overarching purpose is to accelerate the market's transition from off-chain economy to on-chain economy. To understand how to do that, let's first take a look at the present state of the world. If you look at existing chains today, you'll notice they all have a similar end-to-end user experience. Each chain focuses on optimizing the chain itself while relying on third parties for the rest of the stack. This approach is effectively the Android approach, where they optimize the operating system and rely on third parties for the rest. An Android approach has worked for chains so far, but it has resulted in an ecosystem that is fragmented and filled with friction. So that right there tells you what they're kind of looking to solve, or have already solved. Ecosystem that is fragmented and filled with friction. So they're trying to get rid of those things. So the existing chain ecosystem, you have the bank, you have your centralized exchange, desktop wallets, mobile wallets, then you have the chain itself and the decentralized applications under that. Unlike Android, Apple takes full stack approach. They build everything from the software to the hardware to the optimize across the full stack. This approach drastically accelerates the transition from mobile and results to the most valuable mobile ecosystem in the world. So they're saying they're taking the model of how Apple does things to the blockchain to build this Blast blockchain. The focus of the next phase of Blast, phase 2, is to create the full stack chain. So here is this is the previous system or pyramid of how things are working, and this is how they want it to be. Bank, Blast in the middle, decentralized application. You can see how this looks a lot simpler. This looks a lot simpler than this and would be less friction and easier to use. Without giving too much away, in phase 2, the Blast Foundation will work with communities to create a desktop and mobile wallet specifically for crypto natives. There is a clear opportunity to build and experience significantly better than MetaMask, and will leverage incentives to accelerate adoption, but that's just the beginning. Now it's important to address the two repeated arguments against Blast: incentives and degen focus. Just seeing how long this is, I don't know if we want to read the entirety of it. Let's go back to the website. Airdrops, leaderboard, devs, why Blast? Let's take a look at that. So, why a new layer 2? After the merge, Ethereum provides 4% yield on ETH. On-chain T-Bill protocol provide 5% yield on stablecoins. If users do not match or beat these rates, they are losing money to a form of inflation. L2s today do not have this yield. Incorporating ETH, Ethereum, and stablecoin yield natives requires a new L2 design from the ground up. Blast is an EVM, Ethereum virtual machine, compatible optimistic rollup that raises the baseline yield for users and developers without changing the experience crypto natives expect. This yield makes it possible to create new business models for dApps that aren't possible on other layer 2s. How Blast works: auto rebasing. ETH itself, not wrapped Ethereum or staked Ethereum or any other ERC20, is natively rebasing on the layer 2. The ETH balance for EOAS, or I'm not sure exactly what that stands for, is automatically rebasing. Smart contracts can opt in to this rebasing, making it easier to existing dApps to deploy on Blast without any changes. USDB, Blast native stablecoin, so that's USDB is the stablecoin on Blast, I didn't know that, is automatically rebasing as well. Like ETH on Blast, USDB is automatically rebasing for EOAS, which I should know what that means, but it's not coming to me. USDB is also automatically rebasing for smart contracts. Smart contracts can opt out from this rebasing. And then you got layer 1 staking, and then you have this T-bill yield, which I'm not sure what that means, so let's read that. Users who bridge stablecoins receives USDB, Blast auto rebasing stablecoin. The yield for USDB comes from the MakerDAO on-chain T-bill protocol. So T-bill is a protocol. USDB can be redeemed for DAI when bridging back to Ethereum. In the future, the Blast community will have the power to supplement or even replace MakerDAO with Blast native solutions or other third-party protocols. And then the part you guys probably care more about, gas revenue sharing. Other layer 2s keep revenue from gas fees for themselves. Blast gives net gas revenue back to dApps, decentralized application, programmatically. dApps developers can keep this revenue for themselves or use it to subsidize gas fees for the users. Now let's see. Oh, we got some tokenomics here. All right, this is what we really want to see. So this is the tokenomics. Ticker BLAST, B-L-A-S-T. Total supply 100 billion. We went over that. Here's the correct address and the only address. Don't use any other contract addresses, but this one. And you'll find that on CoinGecko really easily. So token allocation, 50% for the community, 25.5% for core contributors, investors 16.5%, and Blast Foundation keeps 8% token distribution. Community Blast success is only due to the community of users that build and that contribute to the ecosystem. So 50% of the total Blast supply is reserved for the community and will be distributed through incentive campaigns. 100% of this allocation will go directly to the community. The community allocations unlock linearly over 3 years from the date of the TGE, and any distributions will be according to schedule determined by the Blast Foundation. So when we were going over the tokenomics in the very beginning of this video, and I was saying, where are all the coins? Because, you know, I think it was 17.2 billion were actually in circulation, and you have 100 billion in the max supply, which is kind of worrisome because you want to make sure a large majority of those coins are not held by early investors and early seed rounds who are going to dump on your head as soon as, you know, they are allowed to. And that's different depending on what project you're in. They set up different, you know, vesting schedules of when people can get out and sell their coins. So 50% of this, they're saying, is going to go, so that's 50 billion tokens are going to go to the community allocation and be unlocked linearly over the next 3 years. So that's good. At least we have some idea where those tokens are, what they're going to be used for. Then you have core contributors, and that's 25.5%, which is about 25.4 billion tokens. All tokens distributed to core contributors are subject to a 4-year lockup period, which is good for any investor. With 25%, the core contributor token unlocks 1 year after the date of the TGE, followed by a linear unlock each month over the following 3 years. So there will be some unlocks after a year, and then there will be more unlocks, you know, on a monthly basis, it looks like, over the next 3. So investors, they allocated 16.5% of the 100 billion, which is 16.5% or 16.5 billion tokens that they are, I guess, allowed for early investors to buy in, because they do need that liquidity. I mean, everybody gets mad about early investors and seed runs and, you know, seed periods where they sell tokens, but in all reality, they need that liquidity to build and to pull people in to do marketing. So it is kind of a necessary evil when you're launching a new token. Evil, I guess, is a perspective thing if you believe it's bad. All tokens distributed to investors are subject to a 4-year lockup period. So whatever was going to be unlocked after 1 year period, it's not going to be the stuff that investors had. So investors who bought into this are subject to hold for 4 years, which is pretty good for us. With 25% of the investor token unlocked 1 year after the date of the TGE, followed by a linear unlock each month over the next following 3 years. And then Blast Foundation is keeping 8 billion tokens, 8%. And it says the foundation allocation will be held in reserves to be used towards critical infrastructure and further growing the Blast ecosystem. The foundation allocation is unlocked linearly over a 4-year period of time from the date of the TGE, and that is good to know. So you have this phase 1 airdrop, which is like a community incentive thing that's part of the 50 billion tokens that they held to, put out in community incentives. Airdrops would be one of those, because that gets people a lot of times for farming the airdrops. If you've never heard of this kind of thing, maybe you're new to blockchain and the decentralized DeFi part of it, and not just the buying the coins on CoinGecko, but they get people to farm the airdrops. People have to do specific types of interactions with the blockchain that gets the activity on the blockchain itself, Blast blockchain, up, and that gets everybody excited because the numbers are going up and people can see an increase in activity, adoption, those kind of things. And so that's why they do these airdrops. They're not just because they want to give away free tokens. So you got Blast Point 7%, Blast Gold 7%, and Blur Foundation. Not sure what some of those are. They're going to tell us. So Blast Point is 7%. Users that bridge ETH or USDB to Blast bootstrapped the initial liquidity on the Blast ecosystem and earn Blast Points throughout Phase 1. These users will be rewarded with 7% of the total Blast supply. That's pretty good. Blast Gold, users that contributed to the success of Decentralized Applications earn Blast Gold and will be rewarded with 7% of the total Blast supply. That's pretty good. Vesting, the top 0.1% of users, 1,000 wallets, will vest part of their airdrop linear over 6 months. Vesting is subject to reaching a monthly point threshold based on Phase 1 activity. Further details will be provided on June 26th, so that would have been yesterday. Today is June 27th. Blur Foundation, 3%. The Blur Foundation will receive 3% of the total Blast supply to contribute to the Blur community for both retroactive and future airdrops. So that's all pretty cool stuff. Let's see what else they have here. They got bridges, contract verification. Don't want to get too technical on you guys and lose some of the people who really don't want to hear all of those things. They just want to hear what it's about and what the point is. So we're going to jump over to, you guessed it, Twitter. And we're going to go, this already has a huge market cap. What did we say it was? It was 414 billion. Or million, sorry. That is a misspeak. I know that people will comment and make a big deal about that. The market cap of Blast is $414 million, which is not too shabby for a new project. So we'll click follow over here. Please come follow me over here at _ground crypto. That's crypto Ron at _ground crypto, because underground crypto was obviously taken. So we're going to follow them, and I will repost, retweet, whatever you want to call it, certain things that I think are important. So right off the bat, let's see how many followers. 857.2 thousand followers. That is not too shabby. It says it joined July 2023. They got their Discord and a link to their vision, which is what we already read, I believe. It had the long video in that section. All right, so the pin post was on the 26th, which was yesterday, and it already has 1.1 million impressions. That is bullish, in my opinion. That's very bullish. I don't know if they paid a lot of money for marketing. It probably is because they have airdrops going on, and that's a really big deal to people. It's basically free money if you know what you're doing. and are, you know, active in the community. Blast app, pretty sick. Having single mobile app for everything to do on chain is going to be killer. Social layer ones, or social layer plus consumer app thesis. It's pretty cool. Maybe I'll check that out and make a little video about the application itself. It does seem like this has a lot of China, you know, association, that this has something to do with China, because they have posts written completely in Chinese. So that's pretty interesting. It looks like most of their posts are written in Chinese. Okay. That is interesting. Which is not a horrible thing. I mean, we're, you know, there's a lot of technological advances over in China. We don't necessarily have to be scared of that. I know that everybody in crypto who's been here knows that they've been trying to quote unquote cancel cryptocurrencies for a long time. But have they really? I don't think so.